This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to give you I'm going to go through a specific trade setup that I think is an outstanding intraday strategy. I used it for a time when I was working on a hedge fund, and I was working on intraday trading, short-term intraday trading. And I came up with this approach where I had the program spitting out ideas for me, but I was also sort of looking at what the general market was doing and trying to go in the direction of that and find the individual stocks that I thought were going to play the best and looked similar to what the market was doing that day. So there was a time where when I'd have 3 or 4 positions on at the same time. They were fairly easy to manage simply because I was using a chart trader approach where I could see the stops and the targets and everything right on the screen. So it made it a lot easier to have more than one position on at a time. But I want to go into this because it fits right into my whole strategy. It's exactly the strategy out of my book and out of my course. And I think you'll see how this can be a really great tool if you have the time. Now, here's what I'll tell you is it's not the type of thing that you can just dabble in. I think if you're going to do this type of strategy, it's got to be a kind of a commitment where you're coming in and you know that you're going to spend a couple hours basically from 9:30 till 12 pretty much every day trading and watching everything that's going on. It's not really something that you can just try every now and again or something like that. But what I will say that is you can use this to your advantage in understanding my approach. So, I mean, if you go and look at some of the patterns that I'm going to talk about and go look for them, you will be amazed at how what I'm showing you on monthly, weeklies, and weekly dailies show up on the 5-minute and the 1-minute every single day in both directions, long and short. All right, let's go ahead and get into this. I think this can help you. For those of you who'd like to learn more about the courses, you can go to rabilstockresearch.com/services. But one thing I would suggest if you're fairly new to this and you haven't gotten the book yet, I am offering at a discount right now. If you go to rabilstockresearch.com/book, you can find out more information. So I'm going to use TC2000 for this example, and it's just easier for me to lay it out. And what I wanted to show here is I've got 8 windows up, okay? But in reality, it's really only 4 charts, 4 stocks that I'm using. And on the right, I've actually got the S&P over here. This is the spider. That's a 5-minute on the top and a 1-minute below. Okay, and then I've got microchip 5-minute here, 5-minute and a 1-minute. Okay, so you see what I've got here are the top charts are 5-minute and underneath are the 1-minutes. All right, now typically when I was doing this type of trading, I would have this spider up on a different monitor, and I'd have 4 charts up at the same time, and I would be using the chart trader to put the trades on and see everything up on the screen. So I could see where my stops go and I can adjust my stops right on the screen, and it would make the adjustment there. So that's how I would handle this. But the reason I had all these charts up, I had 4 different charts up, is that I'm going through and I have a screen that would run. Essentially what I'd be looking for is a 5-minute chart that had a move to the downside and then rallied back to the 18, preferably with the 40 down to. It's a lot of times it would be looking like that, where this is the 40 here and the 18 is declining. We're getting a rally after a sharp move to the downside, essentially a bear flag. Okay, that's kind of what we're trying to find. And what I'd be looking for is a opposing trend pattern on the 1-minute. So the clearest example is actually on the spider. You see this strong move to the downside on the 5-minute, right? And then we get a move, rally back up to the 18 below a declining 40. We've got a bearish pinch play. We've got negative DI starting to kick in, causing the ADX to move up. All right. Now that is taking place. If I click on this, you can see that is this rally here on the 1 minute. So let me just zoom in on this for a second. So this is the 1 minute, and we've got the strong move to the downside, and then we get our rally to the upside. So you could draw in your trend line here. It is parallel to the 18. That does qualify as a decent trend line, and we get the break of that. Now you could look at this as a trigger one. We had no strength on the rally after strong move to the downside. We got a zero line reversal. You could play that for sure. But because it had gone down, it was a pretty big move to the downside. I would be looking for the 2 to develop here. And that would be, making the lower high on this bar. We kind of get convincing evidence. And you could say this, but this was a narrow range bar. We didn't get much of a drop, even though you closed below. This is actually the high bar. So I would say this is really the 2 here, where we convincingly make the 2 and get back below the 18 after breaking the trend line. You see that? So you're getting in here. Your stop's going to come up above here, and you're playing for a move down somewhere in the range. I would say it's more of a time trade. I'm looking at this by lunchtime. If I'm in somewhere between 10:15 and 10:45, sometimes it's as late as 11, but most of the time these trades are going to set up somewhere between 10 o'clock and 10:30, 10:45. And in this case, it would have been right around the almost 10:45 mark. You probably want to be out, I would say, by 11:30, 11:45. So you're looking for one of 2 things to happen here. You're either looking for divergence in DI, and in this case, it didn't happen. You had strength to the downside, and you got kind of a climatic move to the downside, where you'd be wanting to take profits into that big decline as we're seeing expansion to the downside. Now, this is just the basis for me. I'm not necessarily suggesting to trade using the spider, but that's the best example here as we go through and look. If you look at what happened to Microchip, it had essentially the same issue. We had a big decline to the downside, and we get our bear flag formation with the 18 below the 40. I mean, this is the pattern. This pattern's right out of my book, right out of my course, right? We're talking about this on a 5-minute chart with a 1-minute trigger. And look at how this set up. It moved up, made the higher low. We could draw on our trend line. You could take the trend line entry. You'd have to put the stop up here. So I kind of prefer to let this top out, and then I can use a stop like this, right? So I'm not going to get into the details as much as I did on the S&P trade, but the same concept. We're looking to get in as the 2 starts to develop, put the stop above here, and then play for a move into that 11 to 11:30 time frame, usually. All right. Now, I mean, sometimes it could keep going. It could be very orderly and just keep going. But most of the time, you're trying to get in this thing and get out of it in less than an hour. It should be about an hour-long trade. Sometimes it'll be shorter. It won't last very long. You get stopped out and you don't make very much money. You might break even. But if you're following the trend of the market, you're not fighting the market. You got to go into whatever. So this is why I have this up, because I want to play the direction of this and then go find stocks that look like that, right? Here's this. This one was a little bit different. If we look at the way CSX played out, violent big red bar to the downside. And then we get kind of like a coiling effect where it stays, all the bars following that for the next half hour are inside of that big bar. Okay, and then look at what happened on the 1 minute. We get the decline phase, we rally up, we come down. So we get kind of our little consolidation pattern, but this is making a lower high and this is making a higher high right at the 0 line. So we get our reverse divergence pattern in this case. We draw our trend line in and we get a big red bar signal to the downside that kicks us in right here as this is getting ready to drop. Now, let me just zero in on this for a second. So if we're using my DI approach to exiting a trade, I've done videos on this, a couple of videos on how. So we're in this trade, we're following DI. Red DI is confirming every move through this point here. And then we made a pullback here and a rally in the DI, but this doesn't really qualify as a, there's no there's no real reversal in price. There wasn't a real rally or anything like that. So I can't really call that a lower high yet. But then we get a rally up and we come back down and we actually make a new low, and this makes a lower high. So we have a confirmed DI divergence. I want to take, the first up move here. I'd be putting the stop really tight, and that would be where I would exit this trade using the DI divergence approach. If you notice, we had a MACD pinch play. It was a divergent pinch going back to the upside. So that's how I would handle that particular trade. But you want to make this into a numbers game as much as you can. And if you can put on, when I was doing this, I literally would have 3 or 4 5-minute trades going at the same time. Now, I was using e-signal and trading through e-signal, and I could put all of the entry and stops, and I could just move the stop, just click on it and move it to where I needed. It was a very comforting feeling to be able to see all the stops up there, and I'd have my I would go to the 30-minute chart to help determine where the targets would go. All right. I'm not showing that in this video. I didn't want to turn it into a really, really long video, but you'd want to find where support comes in on the 30-minute, but you can sit back and use the DI as a tool. And then if you get a big burst to the downside, these big drops, you want to just go ahead and exit if it's near the time frame, somewhere between 11 and 11:30, 11:45. If you get that big drop like that, you just go ahead and take the balance of what you have and get out. So I would look at this and say, I've got a 5-minute rally. So we've got the massive decline, strong, powerful move to the downside, and then we get a counter trend play, a rally here. Look at the strength here. We are forming a pinch play to the downside. So once I see that, I'm now going to go on the 1-minute chart, and I'm getting my ABC rally on this time frame. Here's my ABC to the upside. Now, I prefer, in this case, again, it does meet the criteria for a trigger 1, but because this had dropped a lot, you could have waited for the 2 here to form. A lot of times, when you break the trend line, you kind of have to put the stop up here. You could have put it above this peak, but I would look at this and say, I don't want to get into a situation where I'm right and I get stopped out. So I don't want to see the 2 come and take me out before it goes down. So in many, many cases, unless the trend line is really tight, really, really tight on an intraday trade, I'm typically going to let it come up and then play this lower high here. And in this case, you'd be getting in on this bar. You'd have a pretty tight stop, and the risk reward really works in your favor, especially if you can get explosive move to the downside. Now, it's possible that if you're in this, we actually got a DI divergence. You would have probably been stopped out above this bar right here. All right. So you're in here with a stop here. You're out here, right, where you get divergence on the DI, makes a lower high in red DI. You put your stop really tight at that point, and you're exiting. So, there's just a lot of different ways to manage this position. You could be taking targets. I've done a number of videos on that as well, but this is a really, really good strategy. I think you could even do it if you wanted to keep it simple. You could just pull there's 11 major sector, the XLs, the sector spiders, and you could just do this exact same approach on that and see if anything is showing up with this same pattern. Now, I like to play the direction of the market. You could try and find something that's bucking the trend. Maybe like energy's having a really good day, even though the market's down, and you can go and find an energy stock that's pulling back and you want to play that to the upside. You're certainly welcome to do that, but I would generally look to play the direction of the market. And I think that's going to increase your probability and increase your win rate playing in the direction of the market. If you want to just play off the indexes, you can do that. If I pull up the QQQ, you can see it's the exact same pattern. You get the same reversal pattern. This is right out of my book, right out of my course. This is the exact pattern we're looking for. And I know it might look like I'm cherry picking the perfect day, and not every day is going to have this. I mean, yesterday was more of a gap up, and then it kind of crapped out. But you can go back and look. 3 of the last 5 days have offered something like this, especially if you go and you look at something like, say, you looked at something like XLY or something like that. I bet you'd see a number of times where you get either a bull or a bear flag to start the day after a decline or after an up move. You get a counter trend move, and then you can play the opposing trend trigger off the 1 minute. All right. Let me know if you have any questions. Thanks.